Hi, good evening. Welcome to the Pivot Trade, the channel that teaches you how to benefit from trap traders and become profitable. And we are looking at the chart of Bank Nifty right now. It's a 5-minute chart. It's the post-market analysis of Nifty and Bank Nifty. So in this video, we will be starting with Bank Nifty first. And you can see here that Bank Nifty opened with a green candle, and it was not exactly a very strong green candle because it had a wick on the top here. What did it show? It was taking resistance exactly at the top central pivot, and it was taking support at the bottom central pivot, and exactly at the central pivot was the body of the candle. You can see that the body is divided exactly at the central pivot range, and the central pivot range was in the first candle acting as a strong support as well as resistance. So it was obvious that it was going to break out to one side, and as you can see, the very next candle, the 9:20 a.m. candle, broke out of the central pivot range, and it had formed a strong green candle. So this is a strong green candle, right? The breakout candle is a strong green candle, but the problem was at the same time Nifty was still within the central pivot range resistance. As you can see here, this was Nifty doing the central pivot range here, inside the central pivot range here, and was stuck there. So I had also tweeted about it in the morning that it is not a good idea to take a breakout trade at the central pivot range. You have to watch both indices. So what will happen is either this index will pull the other one up, or this breakout will fail and that index will pull the one that's breaking out downwards. So you must observe the other index also. You must understand that the other index has to break out of the CPR for it to be a successful breakout. So I'd also said that it might pull Nifty up, that is Bank Nifty might pull Nifty up as it did today. Yeah, well, that's fine, it did, but it was still a low probability trade to be taken here, right in the second candle itself, because it was no confirmation and it was the second candle that broke out. Normally, if the first candle breaks out, then it can be a it can be said to be a strong bullish signal. So if the first candle were to be like this, then it would have been a strong bullish signal. Then what you can do is here, if it's a very big candle, you can keep your SL below the central pivot here, and you can enter at the close of this candle, and here is where you can take your profit. But that was not the case in Bank Nifty today. It was the second candle that broke out, and so usually what you should do is you should wait for the first candle's low to be retested here, and you should see if the bottom central pivot is holding. Maybe after this breakout, if price retraces back, then you should see if you see any sort of a green pin bar here or a green candle here, right at the base of this particular low. I mean the first candle is low, and you should see if the bottom central pivot is holding. And then what you can do is you can take a long trade here, and you can book your profit wherever the price has reversed from. So wherever it has taken resistance and reverse, that will be your swing high. So I'll just write it down for you here. It will be the previous swing high where you will want to take your profits. But then you could see that Bank Nifty actually went up here, then it again came down. It took support right at the central pivot. It did not come back down to the bottom central where this candle's low was. So here was the first candle's low, but it took support right at the central pivot, and then it started going up again. And then it steadily kept going up till the point that it reached the previous day high, which we had also marked in the red line, which was a supply zone. So why was it a supply zone? Because you can see here that price had fallen yesterday. We could see that from that zone, the high of that to the low of the last candle, you could see that it had fallen 600 points, right? So that made it a strong supply zone coming from yesterday. But you could see that it had made it had given a false breakout here, and then price actually came down again with this red candle. And after this candle's low was taken out by this particular red candle, it actually tended to come down. Then it kept falling further, but then it got support here, and then it shot up again, but it has not been able to break that level today. So that red line, the resistance, has not been broken today. So what was the probable entry today? I don't see any particular entry, at least not on the patterns that I trade on. I usually trade on a strong first bullish candle, but you could see that this was a strong first 15-minute candle, right? This was a strong 15-minute candle. So you could see that this was the open of the candle, this was the low of that particular candle, and then you could see that this was the close of that candle with not a very big wick on the top. So that's why that candle actually closed outside the central pivot range. You can see that this is a very strong 15-minute candle. So whenever I see a strong 15-minute candle, then I usually tend to wait for that price to reapproach the low of that particular base of that candle or the low of that candle. Now why is that important? Because you can see that the top central the bottom central pivot also lies at the same spot here. So now you can see that there are a lot of buyers sitting here. So if price comes to that area again, the buyers will be able to defend this very well because of the central pivot range here, the bottom central pivot there. And so the price will most often be pushed up back to the day's high, whatever the day's high till that point is. But unfortunately the price did not really reverse down to this particular level, as I just said it, reversed from the central pivot. So one probable entry was if price had reversed back to this particular low, but that did not happen. And as I said, had Nifty also broken out of the central pivot range during the second candle itself earlier in the day, then that would have been another good entry to take if your risk reward would have allowed it, if your position sizing had allowed it. Otherwise it was a very good idea to wait for some sort of a pullback like this, then take an entry here where your SL would have been here, then you could have taken your profit back at the previous day high. So like so you should be able to analyze price action in the live market. So a pretty simple price action as of today, no real choppiness today, it was very smooth. And let's see what levels we have to be marking from today's price action. I don't see any particular level other than the day's low, which is a strong demand zone coming from today's price action. It was a good bounce from the day's low, so it has actually taken out the entire fall from yesterday. If you see from today's low to yesterday's high, or today's high itself, it's about 515 points, and yesterday we had seen that from that high to the low it was about 600 points. So the gap up and then the rally has actually eradicated yesterday's fall entirely. So I mean, really, let's go to the daily time frame and see price has not been going anywhere. We're just seeing that price is actually making lower highs, but most often it is staying within this particular range itself. Now with this particular candle here, the red candle, which is the 27 June candle, it is important that this candle's wick, the 5th July's candle wick, which is above the level of that close of the 27th June candle, has to be broken. So the red candle today is taking resistance exactly at the 5th July candle high. So then the next resistance we will find is somewhere around the level of 34,750. So that is something that we need to keep watching, and we need to see if price does break to the upside now, because we have seen that price since 30th of June has been making consistent higher lows. Okay, now let's go to the 5-minute time frame again, and we should see here that we do not really have a virgin CPR coming from today. If you go to the 15-minute time frame, do we see any other important levels to be marked here? No, we don't see any other important levels to be marked. We do not have any supply zone from today because price hasn't really made a big fall from the top, and whatever fall there was from about after 1 p.m. that fall has been recovered after 2:30 p.m. So after around 2:45 p.m. you can see the big green candle here. That was those three green candles have completely recovered the particular fall here. So we do have all other levels marked, and we will just simply draw them forward. Okay, and we don't see any other levels to be marked here. We can see that there is a virgin CPR right below, which is coming from the 4th of July, so it's pretty much recent, so we don't need to delete that right now. That was the price action analysis for Bank Nifty, and we'll be heading over to Nifty now. Okay, now you can see here that Nifty had actually made a doji kind of a candle, which was the first candle, and Nifty actually happened to open outside or below the central pivot range. Since this was the central pivot range, you could see that Nifty has opened below it and it has closed within the central pivot range, but it was taking a resistance right at the central pivot. But then you can see that the very next candle itself broke out of the central pivot, but then it was consistently taking resistance at the top CPR. You can see how long it took to actually consistent or convincingly break the top CPR. Now you can see here that this candle had actually broken the top CPR, but then it was taking resistance again here. It again came down. It came right down almost to the bottom central pivot here, and then it again shot off from there. Then it kept going upwards. So no clear price action in Nifty today. It was not very consistent. It was up and down. It was better in Bank Nifty, like we saw. Like I said, in Bank Nifty it was pretty smooth, but in Nifty today we saw that there was a lot of commotion, there was a lot of noise, and you can see how Nifty took resistance, came down again with big candles. It went up, then again it started going sideways, then it went up again, it took resistance, came down, then it got a support, then it went sideways for a while, and then it started making these lower highs, or sorry, higher lows, I must say. So these are all higher lows. Okay, so it was making all these higher lows here, and we can see that consistently it was on a trend, a short trend there, a 5-minute trend. And then again, when we saw that it went to the high of that particular time frame, it came down again. It took support around the central pivot range again. So around the top CPR it took support, then it went up again, and then again here the previous high that it had made, it went there, and it kind of, the day kind of closed around the same area there. You can see the 3:25 p.m. candle right here. So in this sort of price action, what do you normally see? What you can do here is normally mark off the low of this candle. Okay, and as I said, then you can go long on this particular candle when it retraces back to the low of the opening candle. But the problem here is this opening candle is not very strong. The second problem here is that the risk reward is not good. If you were to go long at the close of this candle, your SL would be here. And where is your take profit? Your profit booking should be at the day's high. So what was the day high up to that point? It was this point here. And so your profit booking should have been here. So let's say you booked your profit at this level. So now would you go into this trade? This was your SL and this was your profit booking. Doesn't really make much sense, right? It's exactly the opposite of what we want. What we want is 1:2. Here we can see it is 2:1. So not really exactly tradable, that kind of a pattern, but you generally get the idea of what pattern you normally trade on. It's the opening candle, a strong opening candle, and price that reverses back to its low, which shows me some sort of this kind of a reversal pattern. So if you were to add these two candles here, what would you find? You would find a red bodied candle there, which would have a very small body like this on the top, but then you would find a long wick like this to the bottom. And what is this? This is a bullish pin bar. In spite of the color being red, it still is a bullish pin bar. So you should still call it a bullish candle. Why is it a bullish candle? It is a bullish pin bar because the wick is important. The color of the candle in such candles are not important. So if you were to add these two up, it would lead to this sort of a pin bar. And this bullish pin bar has a long wick on the bottom. It is okay if the color is red, but the important part is that it has a very small red body. So the wick in this case is important. But that bullish pin bar, as I said, is of no importance, is of no value, because the risk reward was really bad. Had this particular candle been a big red candle, then it would have been more sensible to take that trade, or this particular candle had been a smaller green candle, something like this here, then it would have made sense to go long here, and your SL would have been here, then your profit would be here. So then it looks like a totally different scenario, right? So that is how normally I tend to trade. And yes, after that you could see that price actually had a long sideways trend here before it caught this trend here, which was a higher low trend. But before that it was in a sideways zone here, not really doing anything, not going anywhere, and then again it went into a sideways zone, pretty much a sideways zone in this state, and then it got came up again, and then it went to the high of the day again. Okay, so in Nifty we saw that it was a pretty up and down kind of a day, no real price action to be seen today to be trading. Now if you see from the low of this day, this is the low of this day, right up to the high that it has made, it is about 200 points. So not a very major jump, I would say, and but still again you can see that Nifty has also recovered, the almost recovered, I would say, the fall of yesterday, the fall that had happened yesterday after 12 o'clock, the later half of the day. The Nifty has recovered today. For the entire day it kept going in an upward trend. So we'll check the 15-minute time frame now in Nifty. We could see here that this is the 15-minute time frame, and there is a strong green candle here taking resistance at the central pivot, and here you could see that there was a red candle that was formed that took out the first green candle entirely, and then again another green candle was formed. So really price was not going anywhere in Nifty for the first half an hour at least. Then we could see a small trend here, and then it came down again, then it went up again. So just an up and down day. And the PDL and PDH levels will be important, but we do not have any important demand zone per se today. Okay, so I don't think there are any other levels to be marked here. We already have a few levels marked. We will just be adjusting those levels or taking them forward. And that is it for the price action analysis of Bank Nifty and Nifty. And if you found this video helpful, do let me know in the comment section. And I might have said Nifty to Bank Nifty a few times earlier during the Bank Nifty analysis, so just apologies for the same. So anyway, you get the point here, and I hope you've liked this video, and thank you for your support and for your time here. If you've liked the video, please hit the like button, subscribe to the channel, and hit the bell icon so you're notified each time I post a new video. If you're finding these videos helpful, then do definitely let me know. It really encourages me to keep making these videos. And guys, please be patient. These markets are not very simple or easy to trade on. Usually we don't see such kind of volatility, but there is a lot of volatility in the markets these days, and trading is not really easy. So just lighten up the load presently and take lighter positions. Just ensure that you keep your losses small, so whenever these markets stabilize and we see lesser volatility in the markets, then at that time you will be able to start trading better. And don't lose confidence. Such markets are difficult to trade, but they will definitely ease out in coming future. Thank you for watching, guys. I'll catch you in the next one. Bye bye.